Hello everyone, welcome to this week's Investment Trends. We'll be discussing what's going on with the stock market and the economy for the week of March 17th. So far as it sits to start the week, the three major indexes are all down on the year. Leading the way down is the NASDAQ 100, as that is down over 8% on the year. The S&P 500 is down over 4% on the year, and the Dow is down about 2.5% so far year to date. So those indexes, as I mentioned, are all down. It seems like they're down a little bit more because of where they have fallen from their recent highs as they have approached correction territory. So all three major indexes are down, and a lot of this is due to the Trump administration, their stance on a detox on the economy, and the threat of tariffs. However, the underlying economy still seems very strong, with unemployment remaining steady and also inflation coming in at expected or even below expectations, which are good signs for the economy. This week, all eyes will point to the Fed Chair Jerome Powell decision meeting on Wednesday. So the Federal Reserve is set to meet. They're set to make a decision on interest rates, and there's a 97% chance that they hold interest rates steady. However, some of his tone and the language, many people will try to read between the lines to see what might happen with interest rates later on this year. Are we still in a stance where they will continue to cut, or is there any potential reason that we may see an interest rate increase? So that's all will be determined, and we'll provide a little bit more clarity on Wednesday. A couple things to keep in mind. On average, the stock market drops 5% 3 times throughout the year. And throughout the history of the stock market, we do see 110% correction on average every year. So those things remind you to remain patient. And also, according to Bank of America research, they are stating that we should start to look to more value and more high quality companies. So some of those value stocks, high quality, what that means is companies that produce a lot of cash, a lot of free cash flow, and have little debt. So some of those companies, when you look at different metrics, they have grown their revenue throughout the year. They pay a healthy dividend yield, and they hold a lot of cash on their balance sheets. So again, according to Bank of America research, here are 5 stocks to help you sleep better at night, meaning make you feel a little bit better if your money is invested in these stocks. So the first stock is Lockheed Martin. Secondly, we've got Kroger stock, Costco, Walmart, and local company favorite P&G. So those 5 stocks have been listed and identified by Bank of America as potentially underbought, meaning they're not in a lot of the high growth phase, and they haven't seen a lot of inflows flowing into these stocks yet. And those stocks could remain stable and help us see through any periods of volatility. So again, keep an eye on those 5 stocks if you're looking for a flight to safety. And like I mentioned, there is a pivot right now in the market where investors may be pointing out of growth and into more of those high quality stocks.